Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 9th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others so more people can see this video. Your likes is literally the juice that keeps this channel going, so please don't forget to hit the like button. Stocks moved higher towards a key support resistance level, and we are wondering now if this bear market is over. However, high yield bonds are still quite weak, and I'll show you why it's important for stocks. Utilities, the sector of utilities of the stock market is actually approaching new highs, so this is really good news if you're a stock bull. Japanese stocks are leading the worldwide stock market rally with a breakout. Dollar is possibly topping out. We'll see if it is indeed topping out. And Bitcoin showed some sign of life finally in the last moments of this week. If you're a subscriber, stay tuned. We will cover all of these various securities. You can see there's quite a bit. Metals and mining, Amazon, Brazil, Caterpillar, Goldman Sachs. We also trade some of the more speculative stocks like Blue Apron, be it Bed Bath & Beyond, Nokia, Revlon, VMware, and Sunrun. So stay tuned. If you're not a subscriber, consider going to MasterChartsTrading.com. Click on sign up for one of the products. I have two products and two packages. One is trading indicators, which I'll show you what they are in a second, and I have a newsletter where I send out various alerts about the securities that we trade. Let's get to the stock market. So stock market, we're looking right now at S&P 500 mini futures. On TradingView.com, a very common graphing site, TradingView.com, this is symbol called ES1 exclamation point. These are continuous futures. I prefer it to securities, to ETFs such as SPY, because it is, well, continuous, and we can also, as a result, trade it not only on daily charts, so daily meaning each candlestick is 1 day's worth of activity where I'm hovering, so each of these red or green candlesticks looking things are 1 day's worth of activity. We can also trade it on any time frame, for example 5 seconds if you so desire. I don't really do that, but people do trade it. So notice on this chart, for example, of 5 seconds, we can see this security moving from the lows towards the blue support resistance line, being rejected there. And so if you were selling it, if you were trading it, I would have sold it short right there at this exact time. And you can see it's still live chart, and you would have made okay money if you have a huge account, possibly if you're using options. But for us humans, we go to daily charts, meaning that we wake up and we look at the stock market, and we, before the end of the day, we'll look at the stock market again, and maybe we'll look at it again before we go to sleep. What's happening here? So number one, looking at this chart, we have 4 lines, the green, blue, red, and yellow lines. So to make it very simple, when the stock, specifically stocks, S&P 500 is a stock, is above the blue line, as for example was here in January of this year, we think bull, we think buy. When the stock, specifically stocks on daily charts, close below this yellow support resistance line, as it happened right there on 29th of April, we think bear, we think downtrend. So since April of this year, we started thinking of selling short, and we did just that. There are several opportunities, for example some in June. Latest one was actually successful because this move down was enough to make money. So if you shorted it specifically right there on 26th of August, you had enough movement to the downside to make money. In fact, some people on my list, or rather some of my subscribers, made very good money because they used options. They bought puts on various securities, as for example S&P 500 or NASDAQ. I'll show you in a second how you can do that. They bought puts. In other words, they have expressed their bearish bias specifically on 26th of August right there, and it moved in their favor enough to make it worthwhile. So then they kind of started closing their positions around here, around 5th, 6th of September, or the 2nd or 6th of September, and then here on the 7th of September, it was already kind of weird looking candle, and they started closing their position. Now we have 3 days of significant move higher. Notice indeed it was quite significant. Even today we gapped, so not something that you see normally on futures, but indeed this happened. We can see it on, let's say, 1 hour time frame, and there it is. There's the gap from yesterday close to open an hour or an hour and 2 hours later, so 1 o'clock on 8th of September and 3 o'clock 8th of September. This is California time, so think in New York it's plus 3 hours, so it's like 4 p.m. to 6 p.m. I guess, something like that. Anyway, so this is actually a very good bullish sign. This is an hourly chart, so each candlestick is 1 hour's worth of activity, and I can do that. I can look at 1 hourly charts because this is a continuous security. This is a continuous futures. So this gap actually is a significant sign for the bulls. On hourly charts, notice what's happening right this instant. We have touched this blue support resistance line at 4092, and we have not yet cleared it. So on hourly charts, it's quite possible that we are done. Okay, are we done moving up? I don't know. Let's look at 4-hour charts. So 4-hour charts, again, I can use the 4-hour charts because it's a continuous security. I do not want to use 4-hour charts on S&P 500 ETF SPY. So here's SPY, for example. Notice there's a ton of gaps here, and as a result, the lines get messed up. But since I'm using continuous security, I'm okay using it. This gap is actually really unusual, but it does happen on occasion. So notice where we are. We're approaching this resistance at 4101. This is 4-hour charts, remember? Now let's go to human charts at 1 days. So we are currently in a bear market. How do I know we're in a bear market? We're still in a downtrend because we have closed, notice here, below the yellow support resistance line on April 29th, and we have not yet closed above this blue support resistance line. So technically we're still in a bear market. So here I put a sign, should we short again? Now this is a very good question, right? It's $1 million question. Right this instant there is no short signal. So a short signal occurs when on daily charts, for example here, we close below this red support resistance line on the 26th of August. That was a short signal. Right now we're above this red line. In fact, we closed above it at 4082. I mean, we're still trading, but I think we can pretty safely say we can actually look at live. And this is, notice what it is. This is a symbol called SPX 500 USD, and this is a contract for difference. Okay, we unfortunately cannot trade it in the United States, but we can trade it if you are outside the United States, and it's a little bit different. The numbers are slightly off, so we're literally touching this level as we speak. Looking at futures, I mean, we have another 55 minutes before the close. I mean, we're after the close, but there is after hours going on. So right this instant, there is no short signal. So if I had a position that I opened back here on 26th of August, my target was reached around 2nd or 6th of September, I would have moved my stop to entry. Most likely I would have taken some profits. If I had puts, I would have taken profits here. Puts meaning I expressed my bearish bias. You can also buy inverse ETFs. I'm not a big fan of those, but it's okay also. So right now I'm waiting for another short signal. We don't have it yet. but the downtrend, I think, is still intact. What would it take for the downtrend to be over? We need to close above this level. I'm gonna read it right with the chart. It's my blue line. It is 4369.75. So you can think 4370. So if we close above that level, I will say that we're done with the bear market, but not until then. Looking at Dow Jones, so you know, Dow Jones and S&P are highly correlated, meaning that they do pretty much the same thing. Dow Jones is, you can see big candlesticks, more volatile than S&P. S&P consists of more stocks, so it's not as volatile, I guess. Not a big fan of Dow Jones, but it can be traded the same way. Bear market also started on April 29th. We had multiple opportunities to sell short back in June, even as early as May. Latest opportunity was right there, 26th of August. Again, you got your target. You know, 2nd, 6th, even 7th of September at the low. Right now, we are basically back into area where we'll consider opening another short position. In fact, the high today for Dow Jones was 32333. The red line is at 32336. So we're almost touched it. So not yet a signal. No signal yet to sell short. I'll wait. NASDAQ is significantly weaker than both S&P and Dow Jones. I already showed this chart. Bear market on NASDAQ started earlier, back in March of this year. We had an incredible opportunity to sell short right there on 8th of April. Some people actually took it and are quite a bit richer as a result. It bottomed out around the 16th of June right there where I'm hovering, and then we had a bear market rally. So bear market rallies are meaning that during the downtrend we are moving higher. This bear market rally was vicious. It was huge. It went, you know, from 11,000 to 13,700. That's a huge move. Yet it was still a bear market rally. We had two, great short signals. Again, short signal occurs when we have a high above the red line and a close below it. Okay, this has happened a couple of times here. Latest opportunity to sell short. You got your target again. You were able to get your target. So that's a nice enough move to have enough money, to make money on the downside. So you shorted like right there, and that's about 7% move in your favor. If you bought puts easily, that's 2 to 3 times. So easily 20% gain if you got out like at the yellow line. And notice exactly where it bottomed. Just bottomed right at the yellow line. So robots see these lines, humans see these lines as well. I showed this example of Occidental Petroleum a while back, and Warren Buffett sees these lines as well. Notice he bought them exactly at the blue support resistance line. RTY mini Russell index futures. So notice all of those symbols are very convenient symbols because they are continuous. So this is Russell 2000 futures, even weaker than S&P and Dow Jones and NASDAQ. Russell 2000 bear market started back in January of this year. Again, tremendous opportunities to sell short, especially in April. Again, right now we're bouncing. So again, we notice where we bottomed exactly at the yellow support resistance line, and now we're bouncing towards this red support resistance line, which is at 1948. You can also look at IWM, small caps 2000. That's 19341. That's where the line is. And that's where I would consider selling short. Now, junk debt, high yield bonds. Once again, I will briefly show you why it is important to look at junk debt. if you're trading stocks. So junk debt, just ignore this top part and look at this yellow graph at the bottom. So this is showing a correlation coefficient between S&P 500 and high yield bonds. It is usually positive. It's very positive, in fact. So I care about the correlation coefficient because high yield bonds also bounced over the past few days together with stocks. Now notice how much weaker they are, whereas junk debt is right at the yellow support resistance line. S&P 500 is already at the green line. Notice how much weaker junk debt is. Does that mean that we're going to continue higher for junk debt and continue towards the red line? Maybe. Maybe this is if we get another move lower for the general market and for the junk debt, I think we need to watch this levels from June, and I think if we break below those levels, I think stock market will also continue lower, possibly just collapse. So market is very precarious, in a very precarious situation right now. We're watching junk debt, high yield bonds for any signs of more weakness or possibly strength. So, but again, to make it obvious how much work high yield bonds need to do to make it back into the bull market, this is how far we need to travel. You see, this is pretty high still. These are unadjusted prices. To make them adjusted, where I'm hovering, it says ADJ. You can make it adjusted prices. So if you use adjusted prices, then you don't have the what do you call it? The junk that doesn't have to travel as far. Adjusted meaning they are adjusted for dividends, because junk debt actually has quite a bit of dividends or coupon because these are bonds. Okay, so moving along, I wanted to show one ETF which is actually defying pretty much any selling. I mean, we did sell off here back in June, and this is XLU, utilities. And so utilities are actually approaching new record highs. Notice the highs were set here in August of this year, and now we're again approaching record highs. So overall, utilities leading to the upside could be interpreted in multiple ways, but utilities do borrow money, so they need low interest rates to borrow money. Now, if Federal Reserve is increasing the interest rates, why in the world would utilities also continue higher? Shouldn't they get slammed by higher interest rates? Yet this is not happening. So it's important to kind of just be on the lookout for this kind of misbehavior, I guess. Utilities are stocks. It's a utilities, stocks of utilities, you see. But it's sort of an important indication of perhaps sometime in the not so distant future, Federal Reserve will throw in the towel to the higher interest rates, or they may give like small incremental adjustments to the interest rates. Could it be that utilities are actually kind of like a indicator of that the bear market is over? It's entirely possible, and I'm actually interested to hear what you have to say, so do make a comment, and please don't forget to hit the like button. So utilities are moving higher. In fact, they're moving to new record highs, and this cannot be ignored. I'm somewhat bearish on stocks, but I'm not going to be completely insane and ignore utilities. So we need to be watching two areas super close, and that is junk debt, JNK, high yield bonds, and XLU, utilities, for signs of bullish behavior. And utilities are unequivocally in a bull market right now. I mean, new highs that were set on 19th of August can only happen in a bull market, in an uptrend. They cannot happen in a downtrend. Additional evidence to possible end of the bear market. We're now currently looking at Japan 225. So this is once again, I really like to use CFDs, contracts for difference, and the symbol for that is JP225 USD. Unfortunately, cannot be traded in the United States. However, we can graph it. If we graphed EWJ, which is a Japanese index fund, you can see they're near the lows, not even close. You see how much difference there is between the two. If we look at DXJ, which is a hedged utility, a hedged equity fund, now that is making more sense. It's near the highs. Okay. But once again, I would rather use the actual index, and the actual Japanese index is that JP225 USD. So what's happening here? We're seeing a new breakout, confirmed twice. So we gotta move higher here on 12th of August, break above this blue support resistance line. That's my support resistance line, and another one today. All right. So this is important piece of evidence for the bulls, for the people who think that their stocks are actually doing just fine, and this whole thing was I don't know, a fluke. So this is once again quite important, and we're watching this as well. And this is like another piece of the puzzle. I cannot be 100% only looking at United States S&P 500. It is important, but it is not the whole thing. And plus, perhaps this type of breakouts are actually sending additional important signals. So we need to be watching this type of thing very closely. Perhaps the bear market in stocks is indeed over. Bull market for dollar, uptrend for the dollar could also be over, but there is no way to tell, because usually, or not so much there's no way to tell, it's not that dollar or the uptrends of such magnitude. I'm going to be looking at the weekly time frame right now. So each of these candlesticks, when I say weekly, W, is a whole week's worth of activities, of trading activity. Okay. Now, if you're trading using my indicators on weekly charts, then notice where I'm hovering, there's this little wheel called settings. Change this length to 52. So it says right there, daily use to 50, weekly use 52. So we're looking at weekly chart of dollar index, DXY, symbol DXY on TradingView. Notice the breakout here in July of 2021 with a huge move. I mean, it's enormous, truly. These types of moves are quite rare, but they do happen. So if you are lucky enough to get long dollar back here in September, as late as September of last year, you're basically, you're done, and you don't need to trade anymore, especially if you had a sizable position. Okay, so right now, after this huge move, and especially after this several weeks of moving up, I think we're overextended, and I'm gonna zoom in on this latest weekly candlestick. So there's that candle. I'm gonna turn off my indicators for a second. There's that candlestick on this week from 5th of September, a classical shooting star candlestick. So the stock or security came up quite high. Then people who think that the stock will continue lower, or we'll call them bears, bear robots or bear humans, they decided, no, we don't want prices this high, and they pushed them lower. In fact, they pushed them quite low towards the lows of the week. Now, ideally, for this candle to be quite bearish, the close should be very next to the end of the session. It wasn't, but it is still a significantly bearish candlestick. So I'm wondering now if we're done moving higher, and dollar has reached its peak for now. maybe. So what I was trying to say is these types of moves don't just end. There could be more sideways moves, somewhat down moves, but eventually it will roll over. I don't know if it will roll over right now. Well, it hasn't rolled over in a year, literally. So we'll see. And then finally, I wanted to wrap up with Bitcoin. So we're looking at weekly chart of Bitcoin. I'm for some reason still getting flack for calling this huge move from April of this year towards the lows. I mean, if you got in on the short side, and you can now trade, for example, you can trade BITO. It's a ProShares Bitcoin Strategy ETF tied to the Bitcoin futures. So if you bought puts on that thing, let's say back in April of this year, you made, I mean, the Bitcoin collapsed 60%, and you could have made just huge money here. Right this instant, we are possibly bottoming around previous lows. We have not made a new low. We had a surge. I'm gonna show it to you on the daily time frame. And we're having this surge as we speak. So it's possible that Bitcoin is indeed bottoming, and maybe we'll move higher. Will it be the end of the bear market? Nobody knows. But right this instant, if we bounce towards this red line, which is at 36854, we're gonna still be in a bear market. So this is a nice big run at 76% if we get there. Yet at that point we'll still be in a bear market. To get to the bullish levels, we need to get to 40, almost 50,000, 49,700. That's the blue line right there. All right, head over to MasterChartsTrading.com. Also, please don't forget to hit the like button for this video. It's literally very important. Hit the like. Head over to MasterChartsTrading.com. Click on sign up and sign up for one of the services I have. So I have two products and two packages. The trading indicators are these lines on the chart, which you can use to trade pretty much everything. Newsletters, again, we send out alerts for various securities. Notice we have quite a bit of stocks this week that we have alerts about. And of course, the best deal I think is to get both trading indicators and newsletters together at $59.95 per month. Is a very good deal. If you need individual attention, you can get 60 minutes of one-on-one screen sharing Zoom session per month by purchasing VIP access. If you have any questions, please let me know. Thank you for watching, and have another great trading week. Bye-bye.